I don't have to send them no money. That's good. Yeah, that's true. But you got to weigh it out. Or even if the insurance company says, yeah, you don't necessarily have to send us any money this month. And sometimes most people who are wise, if you're moving in wisdom, be like, nah, we still sending you something. I'm treating you like a bill. Why? Because I'm recognizing you're part of my wealth strategy. And there are times where I may have to tap into that cash value and I don't need you lapsing. Yes, I know I have that option, but I'm not really going to take advantage of that option if I've been diligent and I recognize, yo, this is part of what keeps us this train moving. So yes, I know the option, but I choose not to orchestrate that option, even though I know it's afforded to me. That's what it says about weighing out the options. And sometimes we can look at the word disadvantage. Oh my God, that means there's bad things. No, it's not bad things. It's just okay. Like as I get to number 6, the tax consequences. Withdrawals that include investment gains before your policy matures can face income taxes. That means if you get to that point where you're attempting to take that death benefit to say, oh, I'm taking this death benefit because I need to take care of something over here, which shows as if like a Roth IRA. Think of it like the Roth IRA. There's a major penalty if you take money out of a Roth IRA that's growing tax deferred before 59 and a half years of age for most Roth IRAs. So you think about that same thing with the tax consequence for the IUL. You say, oh my God, I just need this because, I just need it, not for anything. I need to tap into the death benefit. The insurance company may, send that into the IRS to say, yo, they're taking this thing as, just as income. Instead of saying that they're just borrowing against it. It's a big difference. And that's why at most times it's all about the language. That's why we must research. That's why we must read. It's not a good thing. It's not a bad thing. It's just a culmination of a choice. So any questions, any thoughts before we move on to the next slide? Excellent. Common questions about IUL insurance. I'm going to have Ms. Johnson read, is IUL a good investment?
An IUL can be a good way to save up money in a cash value account that may earn modest returns. However, it is first and foremost a life insurance policy, not an investment vehicle.
I think we have to make that distinction. That's why sometimes when I see certain things online where people, talk about these things and it's like, oh my God, you can automatically become a bank and this, that, and that. So, whoa. See, now you just talking fast. People get caught up, or maybe they could be an insurance broker, or maybe they just got the insurance broker license and, that's how they get their clients. Everyone makes their dollars the way they make their dollars. My thing is, I'm here in the Comeback Collective Circle. We're going to break through the fluff. I'd rather give you the pertinent information so you can be informed. Like I've said before, I always go back to that Sims slogan: an educated consumer is our best customer. You are consuming right now because you are part of this circle, you're part of this community, and we're bringing you value because we're bringing you information that now you can make an informed choice, not just make a choice. Because too many times in life, you can make choices that are not informed. And you feel like you're scurrying around like, oh, I made a choice. You really didn't. Did you really think about that? Did you think about that? No, I just made a choice. No, so that means you didn't think. So that means, regardless of it's an upswing, a downswing, or whatever in between, because you just made a choice. That's not necessarily beneficial. But being informed and taking the time to have your critical thinking hat on, or your research, or if you have your anointed intelligence that can help you, Now you're not sitting there just scuttling around. You're making informed choices. So that means as you made that choice, you understand, okay, here's the advantages, here's the disadvantages, here's what I can do, here's what I cannot do. And now what's your decision? Now, is IUL better than a 401k? For most people, no. If you are not wealthy or affluent, I would suggest, I'm not telling you what to do. I'm not here to be your financial broker or advisor and tell you, just do exactly what I say. But for most people, the answer is why. Most IULs are best for high net worth individuals looking for ways to reduce their taxable income or those who have maxed out their other retirement options. For everyone else, a 401k is a better investment vehicle because it doesn't carry the high fees and premiums of an IUL. Plus, there is no cap on the amount of money you may earn. So that means if you work for a company or you have some sort of Roth IRA or if you have anything that's a KEO, KEOs are usually given to those who are entrepreneurs. It's usually IRAs or people who are workers and they just want another investment retirement account. That's what an IRA is, investment retirement account. That's the acronym for IRA. So you don't feel like we're just throwing out acronyms. Investment retirement account. Has Miss Johnson raised her hand? Yes, Miss Johnson.
Yeah, when you referred to the other investment accounts for self-employed individual, what was that word you used? Keo? I'm not familiar with
Yeah,
that word.
yeah, KEOUGH.
Okay, thank you.
Why don't you pull that up? Because that's great. I'm happy she asked that question because now you'll see the difference. Because that's another type of retirement account that you don't necessarily hear amount. You won't really hear people talk about that. You won't see that advertised. But it's also an investment account. It's also no, excuse my words. Let me backtrack. It's also a retirement account. It's another type of retirement account. So anything coming up for you about a Keo before we move on?
Yeah, it said think of it as a heavy hitter or
Mm-hmm.
a solo 401k.
Mm-hmm.
It allows for much higher contribution limits than
Mm-hmm.
many other traditional retirement accounts. Defined contribution plan. This is the most common. You decide how much you want to put in each year up to a certain limit, often around $69,000 or
Mm-hmm.
25% of your compensation, whichever is less. That's amazing.
Mm-hmm.
And then the defined benefit plan is more complex. It functions like a personal pension. Okay, I'll be researching. Thank you.
You're welcome. And see, that's what it's about. We're not just throwing out random terms just to be like, oh, they know better and they sound so smart. Yeah, I am smart, but I'm wise enough. See, what allows me to be smart and to move in wisdom is that when you recognize that there's information out there that can benefit all of us, not just me, that can benefit all of us, and we break that thing down, now it's about, okay, the information that you're getting from the Comeback Collective Circle, what are you doing with it? It's not that it's being shared with you just to say, oh, I sat with Dr. Clarke and some other people, and we talked about certain things about a dynasty path. Are you applying the principles in the dynasty path so you can start to see a return? You're always looking for ROI, return on investment. Because if you go back to that wonderful scripture that probably most of us know about, when Jesus cursed that one talent fool and blessed the other two. Two were good and faithful servants, and one got cursed. And for some of y'all need to know the difference between cursing and vulgarity. Because Jesus wasn't vulgar to the person when he cursed them. See, you have that mixed up in your brain. You hear some choice word, oh my God, you're cursing. Well, some of y'all some of y'all are really cursing each other each and every day. When you say, I don't have, or I will never get there. I'd rather you say the F word or the B word or the S word. That's vulgarity. But some of this other stuff y'all sometimes say to yourself, I'm not talking about what you say to other people. Sometimes the stuff you say to yourself. And yes, it's still part of the IUL conversation. Some of the stuff we say to ourselves limits us from getting the possibility of what we're supposed to have. So you're worrying about someone else keeping you down, and you keeping yourself down. That's even worse. That's like being the slave who has been freed, like what they did for Juneteenth. You're free, but we still got you in bondage because we kept the information from you. You didn't recognize that you were free, but we made sure you didn't find out. So we still got some more free labor out of you. And sometimes that's what we do to ourselves, even up to this very day in 2026. So recognize, are you positioning yourself to grow, or can you position yourself to be free? And when you start moving in wealthy and affluent spaces, those people are free, because you like them, because they look like you or not. And that's why even at a certain level, and I know some of our black and brown people may not like this, but at a certain level, not even race or color is an issue when you start moving to certain levels. All of a sudden they don't look at you like, oh, look at this. They say, wait a minute, oh no, that's one of the affluent. That one owns oil fields or a diamond mine and this, that, and third, and he could be darker than night. All of a sudden that person looks much more better than someone who could be the exact same person who's down there at not that level. And I know it sounds unfair, but life is unfair. But you can choose your unfair. You can choose your hard. As I asked Miss Johnson to read, can you lose money in an IUL?
It is unlikely you will lose money in an IUL because insurance providers set a guarantee for your principal to protect it against losses in the market. However, there's also often a cap on the maximum amount you can earn.
Exactly. So that's where, so in some ways, it's not so much like if you had an investment account, oh my God, my principal went down. I had some money in the stock market. So, my portfolio lost some value, this, that, that. Since it's still an insurance policy and they have to guarantee based upon what that face value is, they understand they want to keep certain things in perspective. So it's not so much that you're losing money or the potential of losing money, but you just have to weigh that out to recognize. But there is a cap. And as you heard Ms. Johnson stated, for those people who are looking for KEOs, you think people just only have an IUL and that's it? Then they open up a KEO. Maybe they have some other high interest bearing possibility of retirement accounts. Maybe they have several IULs, depending upon how wealthy or affluent they are. And money is just circulating, moving around. But see, that's when you start to get at that particular level and stage. And too many times, it's too few of us, especially in Black and Brown communities, who are navigating in those stages. And that's why we're changing the narrative, we're changing the conversation, and we're changing the fact that not only just for us, but for us to share this information. So we're not just stuck in this perpetual cycle of not having generational wealth. See, you could be born poor. That's not your problem. That's okay. I wasn't born with a silver spoon. I didn't have this and I have that. Good. You worked your behind, you earned it, you built something. Now, how are you going to keep it? Those people who have generated something, built something, and then have something to say, you know what, I'm getting towards near my time. Not that I'm old, I'm older. And maybe it's time for you to pass the baton over. Now you need to keep this train moving down the tracks. And eventually, it's going to be your responsibility. If you kept this train going down the tracks, pass that baton. So whoever's come behind you, here's the baton. Keep this train going. That's why we can still talk about Anheuser-Busch. So we can still talk about J.P. Morgan. Even in some ways, we can still talk about Rockefeller. It's just something to think about. Is IUL better than whole life? Not necessarily. See, this is where the caveat comes in, where at times you may be hearing some of these people on them social media streets saying stuff just to be so focused. That's why I said you always got to weigh the options. Not necessarily. IUL insurance policies have an investment element with flexible premiums. Whole life insurance is more straightforward with a guaranteed death benefit, fixed premiums, and a cash value component that acts like a savings vehicle. Whole life is easier to understand, but it may not provide the upside that IUL can. Why is that so important? Because IUL is going to cost you more per month. And we'll definitely see that when we get to the graphic. But this like they say, apples and oranges. Like we talked about maybe one or two sessions prior. We talked about the fact that Bentley you don't see a commercial about Bentley. You don't see a commercial about a Bugatti. You don't see a commercial about a Lamborghini. But yet, there are people who are wealthy and affluent who know about Bentley, know about Bugatti, and know about Lamborghini. So how are they able to have these high value items and they're not advertising? Because it's not meant for the masses. I know it sucks. Could be a little disconcerting. It could feel a little elitist, but it isn't. Because then we can go back to the same thing about the story in Matthew, which he documented what Jesus did about those three individuals and why he cursed one and the other two were good and faithful servants. Because they were in the marketplace and they doubled and tripled and did what they're supposed to do and had their money moving around and brought back some sort of return where one buried it. And too many black and brown people, we love burying money. My money, I'm not gonna get I'm not putting my money in no stock market. My money gonna get lost. Who told you that lie? Risk is a daily aspect. When you walk out your house, you're at risk. But it got you so much stuck in a box that all of a sudden the possibilities of generating a greater possibility and seeing, living a more abundant life still under the auspices of the Most High. And you're stuck in this box. Okay, yeah, you're only gonna go but so far. Who told you that? Who bewitched you? Who tricked you? Just something to think about. Any thoughts before we move on from this slide?
Yes.
Yes.
Okay, I heard Mr. William Richards, and after Mr. Richards, we'll get Mr. Franklin. Yes, Mr. Richards.
Yeah, I'm looking at the IUL investment.
Mm-hmm.
Yeah, and here is speaking. What is the maximum you could invest in, or the minimum?
We're going to get to that. You're asking a great question. When we get to that graphic that Miss Johnson was able to provide, thank God for her, you'll see, we're going to give you an example. We're going to have some, what they would say when I used to teach in the school. We're about to give you not so much of art and craft, but we're going to give you some graphics. We're going to give you some visuals. We're going to give you some visuals so you can envision.
The age. I'm talking about the age group, that's what I'm talking about.
Oh, no. Age, but see, that's where it comes into play. Most insurance vehicles, the younger you are, the better it is for you long term. Now, someone who could be like, I'm 54, I can get an IUL now, but then they would start it. The premiums would be based upon age, health, things of that nature, and of course, it's going to be much higher than if I find an IUL when I was 25. So, as an individual, depending upon how old you are, now you start weighing out what's the advantage or disadvantage. Is it worth you making this type of investment in this type of insurance vehicle, depending upon your age? So there's no real limit to it. Because remember, it's still and it's still an insurance policy. And then the insurance company is going to say, well, is it worth even giving you this type of policy? They may even weigh out the option. You may have money to afford it, but at the same time, you always got to weigh out those options.
Yeah, because what I'm looking at is, when you reach the age of 70,
Mm-hmm.
most insurances, they don't want to insure you like life insurance or any other
Mm-hmm.
insurance. You could get, like, say, for instance, travel insurance, and then it covers you, like, say, for instance, your sickness benefits.
Mm-hmm.
You travel, anything happen to you, they cover you, like, say, for instance, from 70 and up.
Mm-hmm.
So that's why I asked this question concerning, the maximum or minimum, and what it all entails. Say, for instance, also, sometimes you look also the debt, the burial costs and all those things you look
Mm-hmm.
at. Have that inclusive, that nobody don't have no burden when a person left. All of those things. You're covering your bases. Let's say
Mm-hmm.
you're
Mm-hmm.
dotting your I's and crossing your T's, and making sure that nobody start balling, and they don't want to let the coffin down in the ground, and all those things happen. Those things. The fight
Well,
before even the person is in the ground.
yeah, that's why
Yes.
most times, most people who are moving in wealthy and affluent spaces, they don't just have one insurance policy. They'll probably have that one. It's okay. This one you used to bury me. This one is the one that we took, we use some of the cash value, and the reason why we own that, we own those buildings over there, or we own this house outright, or, we have this insurance policy. This is the cover because I was the key man over here. And, that income may not necessarily come in. So this insurance policy over here is to, be put in trust to cover the fact that, my income that I was generating is not necessarily coming in. There's always different aspects, but that was a great question and a great um, thought to share in regards to recognizing when is a good time and even the age ranges of that. Thank you for that question,
Yeah, because
Miss.
normally what they
Mhm.
do, normally say they have children, right? That are under, let's say, under 70, and just trying to reference that they're able to, like, invest in them, right, at that age, so it could cross 70, even when they reach 70, because it's already instilled in the
Mhm.
insurance policy. So
Mhm.
that's what I'm looking at.
Mhm.
Thank you very much.
No problem, no problem. Mr. Franklin, your question.
Not a question. Did you
Question.
say no to the 401k?
Well, I would say if I'm talking to you definitively, since you are an entrepreneur, as you heard what Ms. Johnson was able to allude to about the KEOUGH, KEOUGH. I would say that would be something that maybe, you would sit down with maybe a local banker and ask them that, since I'm an entrepreneur, and I'm thinking about, what can I start putting away towards when I decide to retire, decide to sell the business, or desire to not do whatever it is that we're doing at that particular time. How can I prepare for the future? So just have those necessary conversations. Everything starts in language. Preparation is based upon the type of conversations and interactions that we have. The more conversations, the more type of communities, the more opportunity that you're allowing yourself to be abreast of certain things, it starts to make life a little bit much more wider instead of it seeming so small and just in a box. That's why I talk about that all the time. We have to get out of these boxes. And most times the way how certain things were positioned in and for and towards our respective communities was about keeping us in those boxes. Don't try to be too smart. Don't try to get too rich. Don't attempt to get too wealthy. Why are you trying to be better than me and this, that, and third? And then that crabs in the barrel mentality comes into play, and then the hating and that and that. Look, there's enough out here. There's about 8 billion people on the planet. There's enough money out here. Now, the point of the matter is, what are you doing to get your cut of it? And not from a space of putting the money above God, but recognizing that, wait a minute, God did give me a talent, and am I out here duplicating it? And then duplicating that, and then duplicating that. It's just like any business. When a person starts saying, you know, I started this business, it started with like, just me and my wife, and then all of a sudden I hired two people. Then okay, what happened after you hired those two people? Well, you know, we was able to duplicate ourselves. And we recognized we needed more assistants and more workers. Then we hired two more people. So you went from first it was you two, then the original two, and then another two. And then no, we had to hire four people. So so your business is able to move based upon what you started to now. Not only is it paying you or giving you the opportunity to be an owner, but you're providing for six other lives. No, no, no. We ain't couldn't stop there because then we got another contract. And then, you know, so we had to hire four other people for over there. So wait a minute. So your company's now taking care of 10 families. Nah, no, no. We got another contract. And now you start looking at all these major corporations who say, you know, they have thousands of employees. That's how it all starts. Every idea starts small. But if you limit it, it'll stay small. But when you recognize it, it's no longer, it doesn't have to be in a box. And that's what these conversations are about. It's no longer having to be in a box. It's like, wait a minute. This can be as big as I so choose to be. What do you choose? What are you choosing? So thank you for that. The bottom line, Index Universal Life, IULs, insurance offers cash value plus a death benefit. The money in the cash value can earn interest through tracking an equity index, as we learned today about ETFs, electronically traded funds. And some is often allocated to a fixed rate account. Sometimes just, you know, investing in bonds or municipal bonds, stuff like that. Stuff that's still generating some sort of interest, but may not generate as much interest as an equity index. However, index universal life policies cap how much money you can accumulate, often at less than 100%, of course, because they have to keep some reserves. You know, you wouldn't want to put all your money. Okay, let's keep up, be mindful of our mics. And they are based on a possibly volatile equity index. Now, beyond the death benefit offered, IUL policies shouldn't be considered optimum retirement savings vehicles. I'll say that again. IUL policies shouldn't be considered optimum retirement savings vehicles. A 401k is a better option for that purpose. So that means if you're looking for your retirement, if you're talking about something to build your retirement accounts, I wouldn't just say IULs. IULs is mainly for those who are affluent and wealthy because they recognize that when they're making these investments, they're not necessarily using this policy just to worry about, okay, which one of my grandchildren is going to get the death benefit. They're making this investment because they recognize it. They're moving and shaking and they're figuring out ways how to get more assets that they can own. The more assets you own, the more that they're producing some level of wealth. That means, and then when that resources come in, you send that money out so they can get more pregnant. And that's how you start seeing how some of these astronomical, you know, values of what people are worth end up happening. And you can just be like one of those individuals as well. Who says you cannot? Because it doesn't, a 401k is a better option for that purpose because it doesn't carry the high fees and premiums of an IUL policy. Plus, there is no cap on the amount you may earn when invested. That's a 401k. Same thing as a KEO. The KEO, you heard what Ms. Johnson stated, which as she shared the research, usually is up to $69,000 per year that you can put in a KEO. That's why usually they position KEOs for people who are, you know, in that realm of, you know, as an entrepreneur. And if they're really making a whole lot of high value money, then not only do they have one KEO, then they may have another one. Yes, Ms. Johnson.
I just wanted to correct that. The 2026 max contribution is $72,000.
Oh, come on. Thank you. Look at that. I mean, you can add some more money to be tax deferred, even though you're an entrepreneur. Thank you for that update. That's good. That's good. So it's good to get clarity. See, we'd be so stuck. Oh my God, we heard 69. And be so stuck on it. Oh my God, now we hear 72. Like, wait a minute. Get your mind out of the box. Get out the box. You're not meant to live in a box. Cats love boxes. You're not a cat. Get out the box. Most IUL policies are best for high net worth individuals seeking to lower their taxable income. That's why when you hear individuals of high net worth have these type of policies, and then they borrow against that cash value, and then most times, if they're wise, which hopefully they are because that's how they became a high net worth individual, they're taking that ability to tap into that cash value that's accumulated to look for other asset and money making possibilities. Let's say I want to go on vacation. Oh, I'm going to go bar because I want to go on vacation. No, that means you didn't plan. You really taken out of your regardless of his whole life, regardless of whatever the vehicle is, just oh, I need money to go on vacation. No, that means you didn't properly prepare. We got to deal with your mindset. That money should have been already allocated. Your money, don't tell me that you're taking money out of something that should be growing just to have a moment. No, you should prepare for that moment. So while you're enjoying that moment, you can be in Bora Bora, South Pacific, or in Europe, in Paris, or whatever place where you're choosing to be, or somewhere in Singapore, wherever you're choosing to be. Your money's still working without you having to push it.